I'm good.
Hey Manoj, how are you?
I'm good, Mukund. How are you?
I'm doing very well. Did you have a good weekend? What did you do?
Yeah, I went to the temple and spent some time with
Very nice.
Dharma.
I took my dad is here in town. I took
Okay.
him to this place called Leavenworth.
Something is coming in between your video, I guess.
Sorry?
Something is blocking half of your video.
No, that is my TV.
Oh, okay. It looked like something is blocking. Okay.
How's this? Is it
Yeah,
better?
this is good enough. Yeah.
Yeah, no, I took my dad to this place called Leavenworth, which is in
Hmm.
Washington, about 2 hours away. It's
Hmm.
apparently a German town. Pretty nice. I liked it. Overall, a lot of
Okay.
fun.
I was looking at your status and saw some artworks. I was just wondering, you make those artworks or what it is?
No. We went on this. Well, we didn't go on the horse carriage, but we just went to that place. Beautiful day. It was very sunny and nice, which is rare, but in the summer, it's to be expected here in Seattle area.
Right. Nice. Good to see that.
Awesome. So let's get started.
Hmm.
Uh, let's start first with just a quick review of the week. Let me just share the screen first, just to see what we saw in the week. Uh,
Okay.
Overall, if you look at the overall market, I think we saw Nasdaq go up about nearly 3.5%.
Right.
The Dow and the S&P were not bad. The Dow was the lowest, about 3% for the week, right? Uh,
Yep.
and then the strength was definitely in semiconductor, a lot of strength in regional banks, which is pretty surprising, I guess. But overall, even in builders, so overall, just lots of strength across the board. Obviously, all the red is the inverse ETF, so that seems to
Right.
make sense, right? One went over the other. Let's quickly walk through maybe the SPY, the QQQ, and the IWM. All of them did well. They ended the week. The Friday was a weekday, I thought, right?
Yep.
Was the only weekday, but otherwise it was a good week overall. First 3 days, first 4 days, Monday through Thursday, I ended up at about 2.9% up for the week,
That's
and
nice.
and year to date I'm up about 41%, and month to date I'm up about 11.5%, something like that.
That's really amazing.
Not bad at all. Let's go
Absolutely.
quickly through S&P, SPY, the QQQ,
Sure.
and IWM. What do we
Sure.
see? Are we seeing more strength, or do you think there is a
Give me,
chance that we might
give me
actually?
just one moment and I'll just take you through my charts.
Absolutely.
You'll have to enable chart sharing, screen sharing.
Yeah.
It's disabled.
All participants. Yeah, I think all participants can share. Are
Can
you
you
able
see
to
my
share?
screen now?
Yeah, there you go.
Okay, give me 1 second. Okay, so that's a daily chart of S&P 500 ES.
This is the daily chart, and it's about
Daily
what,
chart.
6 months
Okay.
out?
So the reason I'm starting with the daily chart is to point towards what we spoke about last time. When last time we spoke about this diamond formation as well as this ascending triangle,
Yeah.
this red line and this red dash, the dotted lines.
Yeah.
So what markets did on Thursday was it broke out of this diamond. At the same time, it almost crossed over this ascending triangle resistance of 4,200. Now, everyone in the market actually went gung ho when they saw that it is actually breaking out of this 4,200 zone. Friday, it kind of petered off and kind of dilly-dallied whether it wants to move ahead or not. I
Yeah.
would call it as a breathing first before starting to rally again. In another language, if we go to 4-hour chart, this diamond actually is a breakout of 4-hour chart. This diamond breakout is actually breakout of a 4-hour on a 4-hour chart and not on the daily chart.
Yeah.
And normally what happens is whenever breakouts happen, markets usually go back to the breakout line. So this clawback or either give back of the
Replacement.
gains is basically kind of trying to test whatever we wherever we broke out from. So either touching back this 20 DM 20 SMA on the 4-hour chart, or maybe coming all the way here to the breakout line.
4120.
4160 to 4180.
Yeah.
So I would say 4160, 4180 should be the buying zone for the bulls. And once we cross past this 4200 again, then there is no looking back before 4300. This is exactly the line where I would not be bullish at. As I spoke last time as well, 4325 is the D zone as a deadline zone for me. I would definitely not even place any bets. I mean, above 4200, whatever I have is for just for 100, 125 points. Beyond that, no, I wouldn't be any more bullish. Does that make sense?
No, I think I look at it going 4180 should be bullish.
Yeah.
4220, 4230 should be when you're going, okay, there might be, then you might get a double top.
Double top is already here. So at 4325 is where double top would be.
Yeah.
4320, 4325. Right now, we are already above this 4200. I mean, we should be above 4200. And 42, 1520 is like, easily it gives you 20, 30 points in a single day. I won't be surprised if, chances are that we may get 40, 50 points in a single day because many shorts are placed somewhere around 4200. They have still not covered. And when short covering happens, it happens in a very fast and furious manner. Or rather, I should say that as the new movie goes fast, X manner, right? So I won't be surprised if beyond 14 to 15, 40 to 20, we get easily 30 to 50 points because that will be short squeeze. All those people who have shorts around this area, because this is where markets have been for the last 1.5 months, definitely all the shorts are trapped here. So they would come to squeeze, cover their shorts around 40 to 20 area, 40 to 30 max, and then we gain 30 to 40, 50 points easily. So yeah, 4300, 4325 is where new shorts should start coming in.
Absolutely.
Now, if I have to go back to say NQ or QQQ as they say, okay.
The Nasdaq.
Yeah, this is Nasdaq. 4R pricing in a channel. Yeah, it's a channel. So this green one is a channel. This channel is basically where markets are actually going in a very systematic manner. At this upper end, you are finding resistance. It comes back, it takes support of the 20 SMA, and then again rises above. I'll take
consistent
you to the daily and the weekly chart, and there is a reason why I'm taking you to that. If you look at this very closely, it has also broken out of this big resistance line of 13,775,
1370.
Yeah, 13,740. This is a big relief for the bulls, because beyond this, again, after maybe 20, 30 points or maybe 50 points for an NQ, there could be easily 100 to 150 points of short covering.
Yeah.
Although I would be very skeptical of my bullish bets here. Why? Because momentum is not favoring the bulls. Now, how do I find momentum? If you look at MACD, I'll just try and take you towards this. With every new high, this is MACD for you. Every new high on the NQ, MACD is not making new. It's making new little lesser, which as they say, lower high, and not the higher high.
Not consistently going higher highs.
Because momentum is going away from the bulls, and that's not the right way to look at it. To be bullish on, not the right place to be bullish on. You would not want to be short because market is still not giving any signs of shorting, but definitely not the time to be bullish.
Got it. So MACD is indicating that every time it stretches out too far ahead, the momentum is still not with the bulls.
Right.
So it's not necessary for it to keep continuing to move up. Every time it hits the top end of the channel for the MACD divergence, it seems to be coming down.
Right. Although I would not call it as a bearish momentum building yet, because many times, even if, for example, even if momentum is fading off, markets are still making new highs.
Right.
So you would definitely not want to go short because MACD is diverging negatively, but it is not the time to be bullish. So even if you are being bullish, take intraday longs, move out as soon as you are in the money. Now, there is one big reason why I am really not very bullish above 4,300 on S&P 500 and even not bullish on Nasdaq. Here is the chart of RTY. Last time we spoke about it, but I did not say why I am not bullish. Now I'm giving you a sign why I'm not.
The weekly chart, right?
This is a weekly chart. you see this is like 10 weeks and my markets have not been able to, if it is a critical support, market should be able to bounce back and go all the way past 20 on the weekly. It has not done that. Now, look at the daily chart. This orange area is a low base. Very, very dangerous sign. Very dangerous sign for the bulls, because a low base is basically a formation wherein market forms a base for a time being and then continues in the direction where it was previous. The previous direction was this.
Downward.
It was coming up from the highs of, say, February. It fell off, then build a base, and now when it falls back, it will fall back hardly and very, very, it will be very, very bearish, break past this particular trend line, which has been holding on for since what was this is from September 20. So this support will be broken. Next time when markets break past this, it won't be easy.
That is 1400.
The lows of June and September, it will not be held. It will break
the
past
1400 range, right? No, that is in the 1600 range.
I'm sorry, what?
That
yeah, 1600.
is in the 1600
1650 range. It will be broken. Because whenever I don't have immediately to show you how the low bases form and how low bases break very expeditiously, but in currency market it is visible very frequently. And if I could go back to any of the euro charts, I would have shown you right now, but it is very last year somewhere it happened. But I will next time, maybe whenever I go, I'll keep that chart ready for you to see that how low bases actually break down.
So to summarize, S&P, we are watching for key to break out. NASDAQ, we're not yet bullish, we're not yet bearish as well, but we're watching on the downside.
Yes.
What about the Russell 2000? That seemed to be in a bearish mode the last time.
At the chart that I shared right now is RTY, is Russell 2000.
Okay.
And another reason why I said I have to be very, very careful on the longs. Whenever markets, if somebody has to tell you that it's a new bull market, in a new bull market, small cap stocks do not underperform. They are the ones they actually perform along with the large caps. These are the small caps which has been holding on to in their ranges for last 2-3 months. It's like 10 weeks. So more than 2 months they have been holding on to in that particular low base. Not a healthy sign for the bulls. Definitely not a healthy sign. So even if somebody wants to go long, wait for either RTY or Russell 2000 to start rallying, caps to start rally break. Definitely not a time to be bullish now. I won't be placing my bullish bets for the medium to long term. Maybe intraday or maybe overnight, a day or two, not beyond that.
Got it. Let me just share with you now what I'm watching for next week. These are the companies that are reporting next week. So I have about 20 companies that are reporting next week. Okay. So
Wow.
I've taken all the 20 companies and I have ranked them by the date of their earnings release. Before is B. So 22nd before market is B, and A is after market. So it's GLBE, Nova, Zoom, Jumia, etc. There are about 20 companies which most are the most popular ones and the most followed. The most
Nvidia also part of it.
Yeah, the 3 or the 4. I was not going to go through every one of them. I was going to go through the 3 that are the most interesting to go through. One is Palo Alto Networks for next week. Another one is Snowflake. And the third one is Nvidia. Of course, Costco also might be another one that we might walk through. But let's quickly look at Palo Alto Networks first, as the company is, from where they are perspective, what is expected? They had a big last.
Maybe it's your network, but really nice.
Yeah, my network is a little bit weak.
I'm not able to hear you, Mukund, probably. Maybe it's the network.
So hold on a second. I think my network is okay now. Are you able to hear me now?
Yeah, I can hear you now. Yes. So I couldn't hear you whatever you said in the last 1 or 2 minutes.
Yeah. So I was saying
after
that
Nvidia, I couldn't hear you.
The 3 companies that are interesting to watch next week are Palo Alto Networks, Nvidia. Those are the 2, the ones that I expect to have.
Yeah, network has gone poor again.
Sorry, say that again.
It says your net bandwidth is low. Your network bandwidth is low. So whatever you speak is going in a very slow manner.
Let's go through Palo Alto Networks. PANW is the ticker.
Okay, give me 1 second.
So for the rest of the folks, Palo Alto Networks is expected to report about 1.6 billion or so in revenue, top line. They are a provider of cybersecurity solutions. They are a cloud-based provider. They've done fairly well, firewalls, and things of that nature. As a SaaS security company in the cybersecurity space, they're doing pretty well. They had a terrific quarter last quarter, which is why everybody was pretty excited. And the stock since then has been, mostly inching upwards, but had a tough time in the middle of May, and now went up again, and now seems to have taken a break again. So let's quickly go through the chart itself.
Okay. So I have this chart here in front of me, and looks like it is heading all the way towards its all-time high, which is 212, 213. It's already 188 now. Went towards 203 and then come back. Looks like a good chart to me, to be honest. Although it has given up. Let me see the 200 MA as well, so it gives me a clear picture. Okay. Not very bullish, but not very bearish either, because it is not very far from its 20 all-time high. Difficult to call. I would definitely not be bullish, but not bearish either. Difficult to give a call on whether you want to be, placing your bets on this particular stuff. Maybe on a daily chart, you can start placing your bets once it crosses past these highs. But right now, no. Although it does seem to be forming what you call it as an inverse head and shoulder. One. This is second, and this is still under the formation, the third one.
Right.
Once this completes and starts rallying from here, you might call it as inverse head and shoulder, which is in formation. And this is where the shoulder neckline would be. So I would assume it is forming an inverse head and shoulder unless and until it breaks past this particular, which is 176, 177. So if it rallies from somewhere here, this area, say 180 to 189, and it starts rallying past this, then definitely inverse head and shoulder, you might want to start buying once it crosses past 201.
Got it. So potential.
Apart from that, it doesn't look any other pattern that is worth buying, going long or going short on.
Yeah. So potential bullish head and shoulders pattern. We don't know. That's what we've got to watch. And the earnings are on the after the day closes on Monday. So on Tuesday. So that is Palo Alto next one. Next one is Snowflake, which is on the 24th, which is Thursday. Sorry. Yeah, I know that's Wednesday. Snowflake, SNOW. Let's look at that chart.
I'm on the chart. Wow. Okay.
So this has rallied quite a bit. They're growing tremendously fast. They're very highly valued, very rich valuation though.
So this is called as a triangle breakout. Actually, it has already broken out of the triangle. You can expect a back test of the breakout. So maybe a back test somewhere around, say, 160, 165. Yeah, it might come back here and then again start rallying past. So mostly, so the one golden rule of breakout patterns is usually you would want to buy it when when it breaks out. So for example, in this case, somebody would want to be bullish once it crosses 163 or 164, but that is actually not the confirmation of the breakout. The confirmation of the breakout is once it back tests and then starts rallying up. That is when you call as a sustenance of the trend, sustenance of the breakout. Once it happens, it should definitely be targeting somewhere around 240, 246. But again, that's for like next 1 to 3 months. But for that, backtest should sustain. Otherwise, if it doesn't sustain and then falls back, it's called a failed breakout.
It has to retrace and then go.
Yes. It may result in failed breakout or maybe backtest and then rally. So it all depends upon how the market wants to take it further after the backtest. So I would wait for the backtest.
What is the level
and then once it starts rallying, I would start my placing bets.
It is right now at 176. So the retrace is happening at the 160 range.
161 to 165 level.
Yeah.
So many a times it goes back. It doesn't make a new low under this. So the earlier low is 165, right? 166. It's normally many a times the stocks would not go back below the earlier low. It will make a higher low and then just start running up. That itself is an indication that the stock wants to move up further. So another second high, new higher high is a good sign. So somewhere around say 170, 169, 172. That's a good sign for the stock to rally. So even if it makes a new higher high, you will start buying there and start placing your bets for. And the first target would be 205, 202, 205, and second would be somewhere around 246. So this is, if you look at this is actually a supply zone.
Yeah.
Earlier low and earlier high, both placed somewhere around this level. So
240,
235, 245 level would be the next difficult target for it to cross price.
So
Makes
wait
sense?
for 165, 163 range. It might retrace, then it goes on a run. And it goes on a run, it might end up all the way to the 200 in the first, and then all the way to 240 in the next.
Yes.
There seems to be there's a double on the 200 range as well, right?
Yes. So 202 and 205 is a first range that you would want to be a little careful. Once it crosses past it, then you should be happy that it is actually headed for a 230 to 40 range.
Right. Excellent. Good. Okay, the last one is our favorite stock of the week, which is the most expected earnings, Nvidia.
You have to be very careful even before you are giving a call on this particular stock.
The good thing is,
you can look at my chart.
when I came back in January, I actually went long Nvidia, and people were like, "Oh, this is a meme stock, not doing well." The earnings were okay, meaning they had a negative earnings both on growth side and also in the data center side of their chips business. But the stock has just been on a tear.
Absolutely, sir. I mean, just look at these weekly candles. Ever since it made a low in October, it almost covered up the entire loss that it had, or the last year's bear market. Almost covered everything. Look at this.
It's up 139% for the year to date, Manoj.
Yeah.
It's doubled.
Unbelievable. It's a typical V-shaped rally. Look at this. Fell so hard and rallied again so hard. Unbelievable. I assume that it should somewhere, this yellow line is actually my weekly supply line. I assumed it should, start falling back from there to maybe this 78.6% retracement of the last year's fall. But no, it doesn't want to give up there as well. Now, the only hope for the bears, whoever is short this name, the only hope is this rising wedge. Last time we talked about it, rising wedge is something where, the narrow range on the upside starts getting narrower. And after some point, it breaks past this lower base and then falls hard. The only hope for the bears is once it starts catering and then falls below this particular line. Otherwise, I would definitely not be bullish this name. Not be bearish now. Not bullish, but not be bearish. Yeah. I don't want to place my bearish bets unless it crosses past this range.
Falls below 289, right? Yeah, you don't want to be bearish until it falls below 289.
Absolutely, yes. No.
Yeah, no.
So maybe around say 280, 285, once it breaks past, I would start placing my bearish bets.
I don't expect this to really go down, given that the AI meme is still so hot. Microsoft. Absolutely. Look at another, just not related to the topic. Just look at Microsoft stock. That's another stock. Of course, they've been talking about AI. They're a good company, no doubt about that. But you look at that stock too, because of the AI binge.
On a tear.
It's completely recovered.
Unbelievable.
Their 52-week high is only in the 350 range.
It's
distance, like 10% away from their 52-week highs.
Absolutely. 350 was high, 348, and it's now 18. Just 10% away from the all-time high.
10% away. And they went.
I have no bets on this, so I have not, participated in this particular bull run for Nvidia or Microsoft, but definitely not bearish as well, unless that is bearish signal. So one thing which I would like to talk about is normally what happens is in this kind of rallies, if you look at the way 20 MA is moving, so I know many people actually trade based on Bollinger Bands. But Bollinger Bands may or may not give you exact, sign of the placing of bearish bets. What I would rather look for is this stiffness of 20 EMA should start smoothening. Unless and until it starts smoothening, you will not start placing a bearish bets. So either it falls past this or it starts consolidating. The consolidation as well as breaking past the 20 EMA is a sign that yes, the stock wants to go down now.
Yeah.
Unless that happens, you would definitely not be sure if the stock is stopping here. Definitely no. So those are my 2
I
cents
think
on it. I'm not very
year,
I'm not solicited.
in beginning of the year, I put a lot of money into Apple, Microsoft, and Nvidia. For
Wow.
something like safe bets, because I have Amazon for quite a bit of time as well, have been excellent. Most of my, I do take ongoing weekly and sometimes daily trades as well. But Apple just broke out as well, 52-week highs.
Almost, it's almost there. Look at this.
Yeah.
Almost towards its all-time high. 182 is all-time high, and it's 175.
Yeah, this is done next week. I'm expecting Apple to break out next week. They also have a June 5th, by the way, is the Apple announcement and developer conference.
Okay.
And they are expecting them to announce a headset, $3,000 Apple mixed reality, virtual reality headset. That's another catalyst. Apple bulls will tell you this is going to head to way above the 180, 185 range.
And another rising wedge. I don't know why would I be bullish on this, but definitely not bearish yet now.
It's not bearish, but it's tough to be bullish at this point, but it's doing very well.
Absolutely, yes. And although technical analysis gives you some clues that stock might start teetering or might start falling or might start rising, but it is not an exact science. It is just an analysis that you want to understand where the markets might give you some clues to go short or maybe start trimming your longs. I have seen those patterns fail. This kind of patterns, this rising wedges, falling wedges, have failed in the past. It might fail again. You never know. So although it is a sign, so momentum again, MACD is completely petering off. Its momentum is going away, but stock not falling off. Stock is still making new highs. So
my 3 big plays for next week that I'm watching closely are Duolingo. DUOL is the stock. Duolingo, Celsius, which is the drink company. So Duolingo had phenomenal earnings. You look at the stock post earnings, it's already 52-week high. It's just going from strength to strength. It's an absolutely strong stock.
Wow. And there is nothing on the chart that I can say that it is worth going long or short. Almost covering up its entire fall of last year. Not away from the all-time high. 204 and it's 150 right now.
By the way, it's already past its 152-week high. It's on a 52-week high. Of course, the long term, if you do the longer term, right? It's done even higher.
Yeah, it is 52-week high.
Yeah. But it's a strong stock. Very good performance, very good. So it got a little bit hit in the middle because of another stock. I'm not sure which one it was, but Duolingo took a hit because another stock, oh yeah. Chegg, CHGG was a stock that took a 50% haircut.
Yeah, last time I think it fell off very hard.
Right, because they said that, right? That was the news. About 2-3 weeks ago, Chegg said that their earnings are going to get and their revenue is going to get a hit because of ChatGPT. So everybody also assumed Duolingo was going to face the same. Duolingo hasn't had any problem with their earnings. They've actually done well. Chegg, I think, is going to have a tough time even coming back to where they are. They took a huge hit, 50% hit. Look at that stock. Sorry, say that again.
Chegg, yeah, I'm looking at it. I'm on it. It doesn't give me any clear. It doesn't give me any clear picture. I mean, I'm just trying to make some trend lines, but no, it's not very clear.
There's no trend line here.
No, it's not a perfect trend line. I'm just trying to make it, but no, it's not a perfect one.
This is just AI on the negative side.
Yeah,
what happens when AI
hits the positive index and yeah. I actually heard that. I heard their CEO talk about it, and the way stock reacted was definitely not a good sign for the stock, for the company. So yeah,
Can you believe at one point in time it was 120? It's now 10 bucks.
90% valuation gone
Total
in
hell.
almost 2 years.
Awesome. That is it. That is for the day. Manoj, thank you very, very much.
Yep.
It was a terrific week. I'm looking forward to a great week next week as well.
Thank you so much, Mukesh, and thank you, everyone. Let's
Thank
see
you.
what next week holds for us.
Take care.
Hopefully, we
Bye.
should break out of 200 on the ES. Bye-bye. Take care.